Hello traders, and a very warm welcome to this video on 2 ways to use Fibonacci extensions. Now, do be aware that Fibonacci extensions are sometimes also called Fibonacci expansions. So they will be different on different charting software. Now, I saw some charting software earlier today actually, which said Fibonacci expansions. Just be aware that they're the same thing. So for the purpose of this video, we're using the word extensions. So first of all, before we talk about the differences between extensions and expansions, which actually isn't really even important, let's talk about what they actually are. So something relationship. Hang on a second, are you at the right YouTube channel? This is Master the Markets, right? Absolutely, because what the Fibonacci extensions actually are a mathematical relationship. What? Mathematical. There we go. That's what happens when you work live sometimes. Mathematical relationship between one price wave and the next. So this is all a Fibonacci extension really is. Just a mathematical relationship between, let's say, one price wave and the next. So why do we use these? I mean, what's actually the purpose of them and how do they actually help us? So there's a couple of reasons for this. First of all, Fibonacci extensions actually give us the opportunity to mathematically target set. So one of the big things that we can use them for is exits from the market. Now, if you're already trading the markets and you've got a couple of years of experience, one thing you may be struggling with is your exit from the market. So you may have no problem getting into the actual opportunity and letting it run and getting into a profit, but you might be struggling and actually having a big issue, and as a result of that, not even making end bottom line profit because you don't know where to exit the market. So what I'm showing you here is one mathematical tool you can use to exit the market on a consistent basis if you're using, of course, quantified swing highs and swing lows, which are mandatory part of using any kind of Fibonacci work. I'm going to show you a method of exit, a mathematical method of exit, which you can then reproduce and scale. So one of the things we use them for is target setting. So it will give us potential opportunities to get out at certain key Fibonacci extension levels, such as 161.8%, etc. And in a moment, I'll show you a couple of key levels which we can use to exit the market for the Fibonacci extensions as well. But one of the other things that they're also used for here, and you may be wondering what this is scaling in and scaling out. So when you're scaling into the market, what that's actually telling you is that you actually have adding to your position. So let's say you have 2 lots running on a position already, trading the euro against US dollar, and you get to a key extension level, which could necessarily be an exit. What you then decide to do is actually scale in and add the position to get to the next level up. Now that's a possibility, it's an option. Of course, you need to key in your money management rules. Everything needs to be risk managed and tight, tested, and you need to put all that in place before you can even think about doing things like that. But at a professional level, you may be looking to scale into a trade for those of you already trading. Now, for those of you that are not trading or relatively new to it, stay tuned. There's some interesting information coming up on this side. But scaling out of the trade is also a possibility as well. So let's say that you get to a key level on the Fibonacci extension, and what happens is you decide to maybe take part of the profits and come out of the position. So let's say you decide that at 161.8, you're actually going to close out 50% of your position. So you're running those 2 lots on the euro US dollar, and you get to 161.8 fib extension, which I'll show you in just a moment. And you decide to actually pull out half of your position, but you still, according to your trading plan, you've got concise rules that say that there's a probability that the trade could carry on running up to the 200% level. That's obviously a possibility. And so you might scale out of the trade and let the trade actually run just half the position up to the next target level up if and when it gets there. So that's scaling in and scaling out. These are 2 ways in which you can use Fibonacci extensions for actually adding to the trade or target setting. But what I want to do is I wanted to show you 2 ways in which you can actually use the waves and the phases from a mathematical perspective to actually exit the market. So there are actually 2 ways you can do this. So let's say, for example, and all of you know by now, if you're tuned into our blog, you subscribe to our channel. If you haven't subscribed, subscribe, hit the subscribe button. I mean, there's some superb content coming out, and we want you to get hold of it and not miss it. But if you have subscribed and you've seen our previous videos, you'll have seen we've launched a video actually already on bar patterns, not only on bar patterns as well, but actually waves and phases. And you already have seen, actually, we'll have spoken about these distances from point to point. So all I'm really looking for here is from this is just, obviously within these lines themselves, there are just bars, OHLC bars. I'm not drawing out all of the bars individually, so that's why these lines exist. Just so you know, if you're a beginner trader, then you understand that this is just OHLC bars in this range here. But I'm just joining up all the close prices in a nutshell. So this is an upward trend. And in this upward trend, you have different points. So you have a swing high here, and you have a swing low here. And all I've done is I've taken the range, the distance in between this swing high here and this swing low here. And what I've done is I've drawn a bar. So you can see, actually, if you look, then there's another swing low to swing high point here as well. So that could also potentially be another bar as well. Now, the reason that I'm drawing this is because there's the two key ways of using the Fibonacci extension is, one, to actually have the Fibonacci extension, the extension needs 3 points. So it needs the starting point, which we'll call 0. Then it needs the end point, which we'll call the 100%. And then it also needs as well the next 0 point as well, so a reference point. So what we'll do is draw from this point to this point, and then we'll look at it from this point just here. So this would actually be, in this case, the 0% level here. Again, here 0%, this would be 100. And this is the first way you can actually use the Fibonacci extension. So what this is actually telling you is the distance from here to here is forward projected upwards, starting from this level here. And what you'll see is if this distance is x, it forward projects for you that same distance from this point here upwards. And what does that mean for you? It basically means, in a nutshell, that now you're going to start seeing where the key levels are. So 161.8%, and then further on higher, you'll of course see the 200% level as well, further higher. And this will allow you to, as I said already, target set. So this is the first way of using the Fibonacci extension. You can use from this point here, this is your 100% level, and this is your reference point. Now, the second way of using the Fibonacci extension is not to use the distance from here to here, but instead to forward project above where the original range was. So let's say this time you'll forward project from here, from this point just there. So of course this then is your 0% in this level. In this case 0, 100, and then 0 gets mapped out to here again. And then what that will do is it will forward project upwards for you. What I'll do is I'll erase this, and I'll actually show you on this diagram just here, so you can actually see this clearly instead of me drawing over what I've already written. So that, just take that off as well. We don't need that for now. So of course you can see two ways. The first way I already said, which was forward project from this range up to here, that was the range X. The second way of using the Fibonacci, of course, here was from there, we got to there, from here, again to here. So the second way of using this, first way was this is your 0% point. Let's take that out. And the second way of using this, of course, is to use this as the 0%, this as the 100%, and then this again as the 0% as well. So you've only got that distance from there to there. What that will do is it will forward project this distance, let's call this X, up for the next wave, and then you can look to see where the 161.8, which is one of the key levels on the Fibonacci extension to look out for. You can see where the 200% level will be, and then you can look to see if you want to, and if it's in your money management rules, if it's in your trading plan. Are you going to scale out at this point? Are you going to add to your position? Are you going to let this run? According to whatever your money management rules are, you will do accordingly. But what I wanted to illustrate here, what we wanted to show you, was very much that there are two key ways in which we can measure this. So one is using just the original wave to measure the actual extension upwards from this point. And that would be from here, that would measure upwards. And so this distance would be X. The second way is to use the retracement, so 0, 100, 0 this time, and then this one just here up, that would be distance X, and that would start to project for you where your different levels are. So these are two ways in which you can use Fibonacci extensions or expansions depending on your broker. And that's it from me on this video. I know that that's added a lot of value, especially if you're a newer trader, if you didn't know this. This is a very key tool which we can use for mathematical exit points. So do take note of it and do a little bit further research. Incorporate this into your arsenal and see if it fits with the rest of your crib sheet. Once again, thank you for watching. And as we always say, stay disciplined, follow your plan, and trade like a master. Bye for now.